Following Ford earnings, which did fall short of analyst expectations, I have Ford CFO John Lawler joining me this morning. John, let's dig into this quarter first. The stock has had a stellar run up over 72% in the past year. But if you're speaking to spooked investors this morning, how much of a concern is this quarter, or do you expect it to be a blip on the overall radar?
I think what we should look at is the trajectory of the business. We hit about the midpoint of guidance in the quarter, but we didn't get to the high end as some had expected us, and that was primarily due to the fact that volumes were short of what some expected, and that was an impact of the continued disruptions we see in the supply chain around Omicron and COVID, as well as the semiconductor issues we've been dealing with for the past year. But when you look at the full year, all of our metrics were up year over year, and we had an adjusted EBIT of $10 billion. Now, project that forward, and you can see the trajectory of the business being strong. In 2022, we expect our volumes to be up 10 to 15%. But more importantly, our earnings are expected to be up between 15 and 25%. So you see the trajectory of the business building, you see a stronger 2022. And as we work through the chip crisis, you're going to see strength in the business as we move through 2022, with the second half being much stronger than the first half.
You beat me to my question. I was going to ask what you expected to see from the second half of 2022. And if you don't mind giving us an overview of how the semiconductor shortage has really impacted Ford.
Well, we've had an impact in the fourth quarter, of course, with shutdowns from suppliers and disrupting the rate and flow of the supply chain. We expect that to continue through the first quarter. Some had projected that it was going to ease in the fourth quarter and the first quarter, but we're not seeing that. We're continuing to see disruptions, not only from the semiconductor issue, but also from Omicron shutdowns in the supply base. As we work through the year, we expect that to ease from a semiconductor standpoint. When this crisis started from a chip standpoint, many of the fabs had put on additional capacity. We see that capacity coming online in the second half, relieving some of the pressures we've had in the supply chain as we move through the second half of the year. So that's why we're confident in the volume uptick on a year-over-year basis by about 10 to 15%.
When I'm looking at raw materials right now, or even components across the United States, we're seeing things such as houses being built, but they don't have garage doors. What kind of impact are shortages of raw materials and components having on Ford, and what kind of impact could they have, aside from semiconductors, throughout the second quarter?
Right. So we're seeing inflation across the board. If you look at our commodity prices in 2021, they were up $3 billion. We expect them to increase another $1.5 billion to $2 billion this year. So we're seeing inflationary pressures across the board. Freight costs are up, fuel costs are up. So we're going to continue to see that as we move through the year, and that is impacting the bottom line. But we're working to manage a higher inflation environment and how we run the business and manage for that. It's clear that that's something we're going to have to do as we move through the year. But as the supply chain eases from the semiconductors, we have great demand for our products. We're seeing an incredible amount of orders come in on our new vehicles. All of our new vehicles are, for the most part, sold out. Tremendous reception of our Mustang Mach-E, our Lightning electric F-150, our new Bronco, the Maverick, which is new. So we've got an incredible lineup. So we see that demand remaining strong. And as the supply chain improves, we see that coming through the bottom line and improved earnings this year.
So despite canceling your plans late 2021 to jointly develop an EV with Rivian, you still own Rivian stock. We've also seen that Rivian relationship has been lucrative for both you and Amazon. Can you give us an update on it?
So we've always been in our relationship with Rivian from a strategic standpoint. We've had a strong relationship with the Rivian team. We've learned from each other, and we're going to continue to do that as we move forward. So we see it as a strong partnership. We see it as a strategic relationship, and that's what we're focused on.
Bloomberg reported earlier this week that you could increase your EV investments by $10 to $20 billion, which would come on top of the $30 billion that had previously been announced. Now that you're taking so many orders for EVs, can you ramp up fast enough to meet that demand?
Well, to me, it's not really about how much you're spending. We're spending enough on EVs, and we might spend more. It's really about how you're spending that money. So we're focused right now on ramping our business, ramping up our capacity, scaling our EV business. And we have our first products in the market, right? We have 3 great battery electric vehicles in high segments, strong segments where we are a leader. And we're going to continue to learn as we launch those vehicles. And then we're taking those learnings and we're applying that to our second generation of vehicles. But our approach on the BEV business is, we believe, one of mass scale, lower complexity and simplicity, allows us to get to market much quicker, allows us to learn much faster. And with that, a simplified scale business, we believe, will build a stronger, more profitable BEV business as we move forward.
In China, the company recorded an operating loss, though profitability is expected, as you said, to improve in 2022. But when we look at Tesla, Oppenheimer's Colin Rusch noted that the EV market in China is nowhere close to being saturated. Do you agree with that? And is now really the time to win over market share there?
Yeah, in China, EV, it's the largest EV market in the world. We're just getting started with our EV plans. We launched the Mustang Mach-E in China in the fourth quarter, and so that will grow this year. But we see China as an opportunity for us, definitely. We're going to improve the business again this year. We've had significant cost reductions in China over the last couple of years, which has strengthened the business. And we expect to have significant profitability and growth as we move into 2023 and mid-decade. So we see China as an opportunity for us. It's a large market. And what we have to keep in mind is that with such a large market, a small share will allow you to have a good business and to have substantial profits. The other thing I'd say about our business in China is the Lincoln brand. Sales of our Lincoln brand in China are very strong. They were up 50% last year, and we continue to see great reception and great demand for our Lincoln products. So between our move into electrification, the strength of our Lincoln products, we're very excited about our potential opportunities in China.
And finally, I wanted to ask about the fact that the company is a junk-rated borrower. Obviously, as we've mentioned, the company plans to spend a ton to switch its focus to EV. You've also mentioned the rising interest rates. Are you concerned about that? The rest of the market's concerned about the Fed, quite frankly.
Yeah, I think we're in a period of higher inflation. We're seeing that come through the business today. As I said earlier, commodity prices are up significantly. We're seeing cost pressure across the business generally. And so we're going to have to figure how to manage that as a management team and live in a higher inflationary environment and find a way to offset that and deliver our bottom line. So it's just something we're going to all have to work through. And I think it's a reality of the business today. Part of it's driven by the supply chain disruptions, but I think there's a core inflation there that we're all going to have to work through in 2022 and into 2023. And we're focused on doing that.
John, thank you so much for taking the time today.
Thank you.